Let's have a look at a few transactions with regards to VAT input and VAT output. Remember that VAT is the abbreviation for value added tax. So VAT is our abbreviation for value added tax. And every item except the zero rated and the exempted items has VAT added to their price. Also remember that we usually calculate our VAT when we have our cost price. We add to our cost price our markup, and then we add the 15% VAT, which will then give me my selling price. So VAT is always calculated after the markup has been added already. Today we're going to look at VAT input and VAT output. So when we look at VAT input, we must remember VAT input has to do with anything that the business deals with, whether the business buys or whether the business returns any stock. And VAT output has got to do with our customers. Whether a customer buys something or returns something. So it's very, very important that with every transaction, that we have to decide, is this VAT input or is this VAT output? Then the second thing we have to decide is it going to increase the input or decrease the input? Or if it was an output transaction, similar, is it going to decrease the output or increase the output? So let's start and let's see how we do with this. Our first transaction is sold goods. Sold goods. So it means we are working with a customer. If we work with a customer, we work with output. So this sold goods to the customer is talking about VAT output. Now the selling price is 400 Rand. So the markup has been included already. And the VAT is inclusive. So when we want to find out what is the exact VAT output amount, we have to now calculate the VAT amount only. So that will be our normal calculation of it's inclusive. So it will be 400 times, I'm looking for the 15, because it's the 15%. It's inclusive, so the 400 is 115. And that will give me the amount of VAT on its own. So we have 52,17. So under VAT output, we will write 52,17 Rand. When we sell goods to a customer, our VAT output will increase, therefore the amount will be positive. Let's look at the second one. Bought goods, cash. Bought, that means we're talking about input, because the business must have bought it. So it's input, so we're on this side. We bought the goods cash, 900 Rand, inclusive of VAT. So when we buy this, we paid for this VAT, and therefore the VAT is going to increase. Now remember our inclusive amount again. It's the 900 times the 15. Inclusive means dividing it by the 115. And the calculation then, times 15 divided by 115, is 117.39. So our amount is 117.39. The next transaction, return goods to a supplier. When we return to a supplier, it is the business that's returning it. So we're talking about input. When we return it, it means it's going to decrease my VAT input. So it's going to be in a bracket or a minus. And they say it is 400 Rand excluding VAT. So 400 Rand excluding VAT means 400 Rand times, I'm looking for the 15, but now I divide by 100 because it's not included in the amount. And the amount is 60 Rand. But that 60 is in brackets because it's returned goods, decreasing the input. A customer returned. Now when the customer returned the goods, the customer, we're back at output. And now the output will have to decrease because the goods are now returned. And here we're here and we read it's 115 Rand VAT inclusive. So if VAT is included in 115, it's going to be 115 times the 15 divided the 115 by the 115. And the answer is only 15. But it is returned. So it's decreasing the VAT output amount. Now allow 100 Rand discount to a customer. So again, it's discount to a customer. So we now know we are on the output side. So if we allow the 100 Rand discount, and that 100 Rand is VAT inclusive, we need to find the VAT amount. 100 times 15 divided by, it's inclusive, so it's divided by 115. So the VAT on that discount that was allowed is 13 Rand and 4 cents. And the discount that's allowed is going to decrease, and it always decreases the VAT output if it has to do with a customer. So remember that the discount that's allowed, the VAT amount on that discount decreases your output VAT. Let's look at number 5. Allow 100 Rand discount to a customer. Sorry, we've done the number 5. Number 6, receive 40 Rand excluding VAT discount. So now receive, that's us, that's the business. The receive one is saying to me that it's input VAT, the business. So I'm on the input side. Now we receive this, so it's going to decrease the input VAT. We're not going to pay that VAT because it's discount. And that's excluding VAT, so that's 40 times 15 divided by the 100, which is 6 Rand. And that will be in a bracket because we are not paying that 6 Rand. Number 7, the discount that was allowed. Now the discount that was allowed is in number 5, was cancelled due to a non-payment. So this customer received discount, but then there was a dishonored payment. So we are now going to cancel this discount. Now you've got to think very carefully. This discount that was allowed has to do with the customer. So it works with the output VAT. And this output VAT now cannot be deducted anymore. It now has to go back and increase my VAT output amount. And the amount was 13 Rand and 4 cents. That's now going to be positive because it's cancelling the negative 13 Rand and 4 cents that we gave him off for VAT. Number 8, the discount received, that means it's us, the business. So that means it's input. This discount that was received is now cancelled. So here we are on the input side. The discount we received decreased our input. Now it has to increase our input. And that amount was 6 Rand. So it's a positive 6 Rand to cancel the 6 Rand we received earlier. Number 9, the owner took stock. 800 Rand was the selling price, and that was VAT exclusive. And the markup was 10%. Here's a lot of information. The owner took stock. Now the owner sounds as if he's part of the business, and you can deal with it like that. But I would like you to follow this method. that I'm going to show you now. If you deal with any stock that the owner took, similar to a sale, so if you deal with it similar as you would with a sale, then it makes a lot of sense. So we say that the owner is almost like a customer. He takes 800 Rand, but careful now, 800 Rand is the selling price, and he never takes it at selling price. So we first have to get our cost price. So we have the 800 times the 10%. Now that's inclusive of the markup, sorry. So we have the 800. We are looking for the cost price of 100. 800 times 100. And we have the 110. So it is 72727. 727 and 27 cents. That is the cost price. And now remember, this is VAT exclusive. So we're now going to take the 727 Rand and 27 cents, and we're going to calculate the VAT amount on that cost price, which is times 15 divided by 100. Of course, it was excluding VAT. And that is 109 Rand and 9 cents. Now that 109 Rand and 9 cents, we deal with it similarly as we would have dealt with it as a sale. That's why it increases my output. So remember, when the owner took stock, deal with it like you would with a sale. So it's output VAT. And now, guys, we are at the end of our transactions that I gave you to do today. And to know now whether we have to pay an amount to SARS, or SARS has to pay to us, or maybe nothing at all, let's have a look and see. So what we do now is we add the input VAT, which is 117.39, minus 60, minus 6 plus 6, which is 57 and 39. And we do the same with our output, 52 Rand and 17 cents, minus 15, minus 13 Rand and 4 cents, plus 13 Rand and 4 cents, plus 109.09. And that gives me 14626. And now the difference between these two is what's going to be paid to SARS or claimed from SARS. So let's take VAT output minus VAT input, and that is, output is 14626 minus 5739, and that is a positive amount, 146.26 minus 57.39, a positive amount of 88 Rand and 87 cents, and that has to be paid to SARS.